Is Bitcoin a currency? There are plenty of questions online about whether Bitcoin really functions as a currency. When we zoom out and look at how money works in traditional, macroeconomic settings, many argue that Bitcoin doesn't quite make the cut. Let's explore why. In a classic economy, a currency has three main jobs. It must act as a medium of exchange, a store of value, and a unit of account. In other words, money should let people buy goods and services, hold its value over time without wild swings, and help measure the worth of items in a consistent way, and Bitcoin struggles with these. First, consider its use as a medium of exchange. In many countries, everyday transactions rely on a stable money supply that people trust. Bitcoin, however, is accepted by a limited number of businesses, and its use in day-to-day commerce is still quite narrow compared to traditional currencies like the dollar, euro, or yen. Second, think about the store of value function. For money to be a reliable store of value, its purchasing power should not change dramatically from one day to the next. Bitcoin's value has been known to swing widely, with sometimes rising or falling by single or even double digits in a single day. Even worse, it crashed 80%. Imagine trying to save your earnings when one morning your savings could buy you a sandwich, and the next they could barely buy you a cup of coffee. This level of unpredictability makes it hard for Bitcoin to serve as a stable store of value, as the majority of the participants in Bitcoin are mostly speculators. On a larger scale, macroeconomic stability is built on trust, regulation, and oversight by central banks. National currencies are supported by policies like interest rate adjustments, fiscal policies, and backing by government institutions that aim to control inflation and ensure stability, although there are depreciation in value over the time, but it's still a better option than most. Bitcoin, in contrast, is decentralized and not controlled by any central authority. This absence of regulation means there's no safety net to smooth out market volatility, which could prevent it from being adopted as everyday money for most. Let's consider an everyday example. Imagine a small country that issues its own stable currency. Its central bank monitors inflation, uses monetary policy to keep prices relatively stable. Now, if you replace that currency with Bitcoin, the daily price swings might make farmers, shopkeepers, or even households rethink whether they can trust it to manage their budgets. Theory of money suggests that trust and consensus are key. While Bitcoin has a passionate community, it has yet to achieve the same as legacy currencies ingrained in people's daily lives. This lack of broad acceptance on a macro level makes it challenging for Bitcoin to become a real currency. Bitcoin might has the potential of being a currency, and even sparks interesting debates about what money could be in the digital age, but with its current volatility, limited acceptance, and absence of a central governing. Difficult, maybe we will need Musk to often post about Bitcoin to get people use them. In a macro scope, Bitcoin is more of a digital asset or investment rather than the everyday money used to run modern economies.